Hello, friends. Today, I'm going to tell you something which is very important point which I'm coming across since you can say last 2 years, 3 years, or you can say many times. People ask me if you have a pension plan and when it gets matured, there are so many options. Like if you see, there are so many options in this kind of paper. But which option to take? This is a common question which I come across with each and every person who has a pension plan. And if he is getting confused because of so many options here. So today I am going to explain to you what are these options. There are A to J options which LIC of India has come out. So practically, if you see about pension, whatever simple doubts, 4 to 5 points, which I'm going to share with you. So let's see how this will be helpful to you. And possibly, if you have a pension plan for yourself, I wish you should watch this video again and again, and you can share this with your friends. So without wasting time, I'll start with few things which are about pensions and the doubts which are common doubts, or you can say frequently asked question. 4 to 5 questions only. We will not make a very big video, because already, if at all I want to explain this A to J options, I have to take some time of yours. So first of all, thank you so much. If you're watching this video, I request you, if you have a pension plan for yourself, and if you're about to get, if your policy is about to get matured, that is, if your pension is due, this kind of questions and doubts will be common with you also. So watch this video till end. So here I go. First of all, what is pension? So what is pension? Pension means, it is like, if at all you're buying a pension, there are two types of pensions. One is, if you see, that is one time investment you do, and immediate pension you get it. That is from next month you can have. Secondly, there is a pension which is called a deferred pension. There are The second part is a deferred pension. Deferred pension means, suppose if you're doing a single investment of, say, 50 lakhs or 25 lakhs or 10 lakhs rupees today, and 10 years down the line or 20 years down the line, 13 years down the line, I wish to have a pension. So say, suppose your age is, say, 47, and you want a pension to start at 60. So you can buy a pension plan which is one time investment or a regular investment, and one time investment with 13 years deferment, that is from 60 onwards you should get pension, and you will get it. So I hope these two questions, first is what type of pensions. There is a immediate pension, and there is a pension which is a deferred pension which you can get at a later age. Secondly, the second point is, people ask me what is a vesting age. There is a spelling, or there is a word called vesting, vesting, vesting date. What is this vesting date? Vesting date means, is a date where what happens is, okay, you buy a pension right now, as I said, if you are at the age of 50, and if you have a pension, say, starting from 60. So 60, like January 1st, you are buying this pension. 10 years down the line, at 60, when you are there, on January 1st is a vesting date. That is, from that day the pension will start. So it is called a vesting date. Vesting date is a date where what happens is, when your pension is going to start. I hope this is 2 points are clear. Now, fastly, I'll come to this point. Now, what happens? When you have a pension 6 months in advance or 4 months in advance, you get a letters like this. People will be having, every person who is having a pension plan from LIC, I'm saying, it can be from any company, first of all. So this kind of pension plan, you get a letter from the company and saying that your pension is due, and select the options what you want in pension, and then what you do is, okay, select whether you want a commutation or without commutation. Now I'm going to explain to you all these things very easily, fast and quickly. Okay, so as I said about, this is kind of letter which is there. Now what are things mentioned over here? First of all, let me tell you, whenever you get this letter, I'm talking about LIC of India. So whenever you get a letter from here, from LIC of India, there is a common letter or common points which are mentioned over here, which I'm going to quickly rush up. Okay, and then you will get this 4 pages kind of thing. Then there is an option which is there. This kind of options are there. So A to J. Then lastly, if you see, you can see this chart. Now this chart people get confused, or many advisors also get confused. So let me be very quick and fast to tell you कि this rates what are there given is a basic rate which is a common. It is not for you, because what happens is every person will be investing in a different way. Might be the amount would be different, possibly the time gap would be different. Like example, some person is investing for his pension for 20 years, 30 years, so his corpus will be very big at the end of the pension when you the pension starts. But if at all you're starting with a small pension, also small amount, so what happens is the corpus which is created, that is not mentioned here. First of all, let me be very frank with you and tell you this you have to find out from your advisor or from the company. Okay, so people get confused over here. In this chart you can say, excuse me for this, I'll show you. Yeah, this chart, this kind of chart which is there. Now when you get this kind of chart, this is given here, it is clearly mentioned, please read. It is, this chart mentions with commutation and without commutation. And secondly, the rates are given monthly, quarterly. What type of options, modes are there? You can get pension monthly. You can opt for monthly pension. You can opt for quarterly pension. You can opt for half yearly pension, or you can opt for an yearly pension also. The choice is absolutely to you. You can ask your advisor also, and him if he is planning for your pension or monthly income, whatever it is. Okay, coming back to here, there are two options. One is without commutation and with commutation. So without commutation, what is without commutation and what is with commutation, I'll explain to you. But before that, this rates what are there, the amount which is given, it is given on the basis of only a small rough sketch of 1,50,000. So if at all your corpus is 1,50,000, how much you are going to get this pension, it is mentioned here. And if at all it is with commutation, I'm telling you before this, I'll tell you with what is with commutation and what is without commutation. Say for example, if your corpus is 15 lakhs rupees at the end of the pension period, that is, the pension corpus is created of 15 lakhs rupees. Now you have two options. Now, two options. Which are the two options, friends? One is with commutation and one is without commutation. With commutation means you have an option to take or withdraw the amount from the pension up to one third. Here, one third of the amount you can withdraw it, and that amount is totally tax free. So as I'm giving you an example, say 15 lakhs rupees, if at all your corpus is there. So 5 lakhs, up to 5 lakhs you can remove. Up to, you can remove 1 lakh, you can remove 2 lakhs, you can remove 3 lakhs, and balance you can keep it for pension for whatever the options you are going to get. Okay, or else up to one third means it is like 15 lakhs is there, so 5 lakhs you are removing, and 10 lakhs is remaining the corpus with the insurance company, and on that the pension will be given. So this option, it is with commutation. With commutation means you can commute one third of the amount. And second option, or first option you can say, is without commutation. Means totally whatever the corpus is created, you must have planned some amount for your retirement fund separately, but for retirement monthly pension or month pension, for pension amount, you must have created this fund. So all that 15 lakhs is there, you are not going to withdraw anything. So when you don't withdraw anything, or you don't wish to withdraw anything, then, and total amount you keep it for pension, then that is called without commutation. I hope these 2 points are clear. So one is with commutation and without commutation. Is it clear? Now I'm going to come with the very important point, friends. Now what is that very important point is, there are nearly about 27 to 30 companies, insurance companies. Now you must have bought an insurance plan with a pension plan with so many companies, different companies, but you have an option. Yes, friends, you have an option to choose that from which company you want to have pension. Were you aware of this, friends? Whether you were knowing about this? So this is a very good facility which is this IRD has given, or this insurance industry has given. So if you are having a pension with any company, friends, you will get a similar kind of letter, that is about the due of your pension. But you have an option. There is one line or one point which is mentioned, that from which company you want to take your pension for your life, and you can opt over there, and you can choose. I will not name any company, friends, because it will be a bias video if I tell anything about the other companies. But what I'm saying is, say XYZ company, you have invested and 1 crore amount is over there which is created, and now you want with a YZ company, say, or whichever company, ABC company, from there you want to opt a pension, you can do it. Yes, you can do it. Only thing is, you have to be alert and see, do these formalities before the time or before the due date. I hope up to now I have cleared basic small points about the pension part. Now I am going to come with the very important point, which is, what are the options? What are the options given for pension? And you can choose that options and see what is feasible for you. Take your advice take your advice, that is, you take the advice from your financial advisor also, because if he's handling a total portfolio, he you can sit with him and plan your total retirement planning. Okay, now coming to this A, B, C, D, E, F, G, H, I, J. Up to J, there are pension options. So, friends, as I say, I will be going through a presentation, but at present moment, I'm just going on video live. So there will be other presentation where a PPT will be shown and where I'll show you all the figures about this. Is it okay? But now I'm just going to explain to you A, B, C, D, E, F, G, because without anything on the screen, if at all you want to see, it will be very difficult for me to do anything activity over here. So friends, I'll just off this video, and A, B, C, D, E, F, G, H, I, J, these are the options which are given. Now as quickly I'll rush, and I'll try to explain to you. Now what are the options, friends? LIC of India, I'm talking about LIC of India. These options I'll tell you. LIC of India started in 1956. So when this insurance company started, the pension plan was also there, or people were having an option of pension. But that pension was given. The first option came was A option. Now what is this A option? A option says as annuity for life. Total life means you will get annuity, that is pension, if at all you start at from 30 onwards, you start saving for some amount, and then pension is created. From 60 onwards, you want a pension. So whenever a 60 date arises or age arises, your pension start. So there was only one option first, which started with A option is annuity for life. That was very good, because people expect that we will live for 100 years. So any person who lives for 100 years, 80 years, he will get a pension from 60 onwards to 80. So this was a good option, and this was the only option. But what happened is, if now you if is very important. People have bought this, and but people came to understand, or insurance industry came to life LIC came and understood, that if at all a person is saving for 30 years, and if he dies at the age of 62, he's just taking 2 years pension only. And then in this pension, the pension rate was very high, quite good amount. But what was the minus point? Like annuity for life. So for 2 years, if at all, after from 60 onwards to 62, if at all a pension is taken, and at 62% dies, what happens with the corpus amount which is created? Say, for example, it is 25 lakhs which is created, or 1 crore is created, and on 1 crore you are getting a pension of XYZ amount. Okay, then only for 2 years you are enjoying that pension, and balance, then what happens? Rest of the money leaves with LIC or insurance company. So they came out with an option called as B, C, D, E. These are the options. Slow and steadily they came. What is the B, C, D, E option are there? B option was Like you can take pension for minimum 5 years. Anything happens, if at all it is for minimum 5 years, you are going to get the pension. So that was the magic. Or see, this with the time, what happens, everyone comes out with, any insurance company or any company organization comes out with some or the other things of R&D, you can say, research and development. With the time we change. So LIC also has come out with the change. So many options are there and beautiful options are given. So B option was minimum 5 years, definitely you will get. And after 5 years, if you leave, then full throughout your life, you're going to get. That is sure. But minimum, if at all a person dies after 2 years, when the pension starts, still at least for 5 years, that person will get. Then they thought like, no, 5 years is not good. Then they came out with 10 years, 15 years, and 20 years. I hope A, B, C, D options you understood, and E also. Now, then option came was F option. Now, F option means then everyone thought like with the what do you say, a mindset like, why only 20 years? If at all that money remains with insurance company only, it is of no good. We want the principal amount also. So LIC of India came out with a plan, or F option, which is the pension starts at 60, example, or 50, whenever you opt for the pension, till you're there, till your life, you'll get pension. And after you, that corpus of 50 lakhs, 20 lakhs, or 1 crore, whatever is created, will come back to your family. So that is called return of corpus. So beautiful. I would recommend personally, without, if at all you don't understand anything, at least you take this option, friends. And this option is very good, means still you're there total throughout your life, you opted for pension, you will get pension. And after that, what happens after you, that money will come to the family, and let the family member or the partner or the spouse decide, or the next annuitant decide what to do with this money. He or she, whoever opt for have this money, can decide again whether to go for pension or not. Or if at all you feel like, no, I don't want pension, I want money, you can take money and you can spend it whichever. After this also few options came. F. After F there was A, B, C, D, E, F, G option. Now G option, what happened in every rates, you can say every option the rate differs, huh, friends. That you have to keep in mind. It is not the same rate, because the scenario is different at every places. Now, till now you understood A, B, C, D, E, F. G option came, like people thought, or that was a option given, like so much inflation is going on. Why, if at all I am getting a pension of 25,000 today, 10 years down the line, 20 years down the line, that 25,000 is not sufficient for me. Then what? Then I should have an option with some growth in my pension. So they came out with an option which is called at least 3%. See, this is an option, annuity for life, increasing at simple rate of 3% per annum. Friends, at 3% every, that is per every year, 3% growth will be there in your pension. So this is very important. That is very important. And then what happened is, but here there is one loophole, friend. What is that loophole? That loophole is that if at all you are survived for only 5 years or 10 years, then after that what happens with the principal amount? The principal amount remains with the insurance company. So people, many, I will not name anyone, but due respect to all my community agent advisor friends, but few advisors give this option and show that the rate is so much big, because the rate, as I said, for every option is different, friend. So friendly advice is, you consult your financial advisor, friend, please. And with that financial advisor, you can remain for throughout his life. Because if at all at 60, say at 60 you start your pension, but after that what happens? Till next 30 years, 40 years, you survive and you get that pension. So if at all in between the pension stops with some other reason, like existence certificate is not given, or so many things, you can connect with your advisor and financial advisor, friend, whoever is insurance advisor, and take his help. You can directly do, but still, I would recommend to you that you take your advice from your financial advisor and both together decide whatever is the best. Coming back to this, as I said about G option, this G option was 3% growth, which is there. But 3% growth, there is one loophole, as I said, the principal amount after you will not be coming to the family. So after this, the option came was HIJ. These three options. So three options, last three options, what has happened is, okay, people came out with an idea, okay, why only I should get pension? Suppose I and my wife is there, and I have a pension amount of say corpus of 1 CR rupee. Now 1 CR is created, but till means I get a pension from my 60, say X amount 50,000 I get per month, if at all I'm opting for that. But I think like after me also my wife should get the same pension or 50% of the pension. That is possible, na? So because I don't want her, because nowadays what happens, many kinds of dementias and so many things, diseases are there, where what happens at a higher age we are not able to manage our finances or so many things. So that time if you opt this option, like I am there, I get a pension, after me my wife gets a pension, say 50%, you can opt, there is an option. If you want 100%, that option is there. And there is one more last J option, like I get 100% pension, that is I get suppose 50,000 rupees pension, my wife gets after me my wife gets pension for 50,000 rupees, same 100%, and after her that money will come back to the family. That option is also given, that is a J option, friend. But everywhere the rates will not be the same. Please, please, please keep in mind, don't be under the impression that all these options will have same rate. Like if at all for A option it is 50,000 and for J option it will get 50,000. No, it will be differing. For example, for differing, for A option where annuity for life is given, you get a return up to 12%, 14%. So people, sell in this pension plans with a wrong advice also, or wrong marketing strategy. Like I can give you 12%, but you should understand. I have seen, I'll not name it anything. There are many, many things happening in the market. So, with due respect to each and every person, again, I'm saying this is a very important point, and I have come across with, you can say, hundreds of clients who had got confused with this while buying and after buying or when opting also. So I hope I have cleared all the points, but still I'll come out with a video presentation with PPT also with the figures in short time, in say 1 or 2 days. So be tuned with, definitely you can write your comments here if at all you have any comments. I thought this is very important because at least I can share this video and it will be helpful to you. Here I can't show you because I'm not sharing the screen. So PPT presentation. Otherwise, you could have seen over here. I hope till then you can watch this video and this will be helpful to you. I hope what is the best pension option I have given you. One is, in if at all it's of from LIC of India. Again, I'm saying it is not only the best. It's up to you what to choose, how to choose. It all depends on your, you can say, portfolio and the returns what you're expecting. So I will not say this is the option only which is good or this is the option which is good. But return of purchase, that money comes to your family 100% because it's a hard-earned money. I wish you should go with, according to me, if you see, is the F option, which is annuity guaranteed for life, and after you, the money will come back to the family. This one is option, I think it's a good one. And the last one, which is a J option at present moment, annuity for life with a provision of 100% annuity, that is 100% pension, means whatever pension you're getting, same pension after you, your spouse or the second person would be getting, and after him or her, the money which is the corpus amount will again come back to the family. I think these two options are good, but still consult your advisor. Don't get confused, as I said, with this chart. This chart is just it is given on 1,50,000. How much is the calculation and at what age it is given? Your age is 50, and if you're getting pension, the amount would be different. If you're at 60, the pension amount would be different. If you're at 70, the pension amount would be different. At a higher age, the pension amount will be more and more. So I'm signing off. Thank you so much. I hope this video will be very helpful, and I wish to come out with so many topics. But please suggest me if you want any particular topics. Creating the video and then going, it takes a little time, but some few important videos I'll come with YouTube live only, because whatever the points I want to share with you, I can share with you. Friends, if you have any questions and you want to have immediate answers, please come. I'll come on video, that is YouTube live. Thank you for watching. Thank you for your valuable time. Please do write your valuable comments, and don't forget to subscribe my channel. Thank you so much. My name is Parag Nesarikar, and this is our 25th year. We are celebrating Silver Jubilee year in this advising, in this financial advising world. Thank you. May God bless you. Till the next video, I am signing off. Thank you. Bye.